Speaking of soft landing, he brought that up yesterday. Here he was.
I've always thought that the soft landing was a plausible outcome, that there was a path, really, to a soft landing. I've thought that, and I've said that since we lifted off. It's also possible that the path has narrowed and it's widened, apparently. Ultimately, this may be decided by factors that are outside our control at the end of the day. But I do think it's possible.
Okay, so Carol, what is that supposed to mean? I hate the way all these people talk. I mean, the soft landing is very possible. It's kind of possible. It might be possible. It's narrowed. Wait, it's widened, but it's narrowed again, but it's kind of possible. Anyway, we'll see what happens. What is he saying?
He's saying a whole lot of nothing. That was the biggest bunch of gobbledygook that I've ever seen. You know, it's very interesting. As I said, on the inflation piece, there are a couple of issues that I do think are a challenge for inflation. Obviously, the fiscal policy, the debt and the deficits, given the fact that we have these crazy high rates. We have $7.6 trillion in U.S. government debt that is coming due that needs to be refinanced in the next 12 months. And that's going to be at rates that are hundreds of basis points higher than what it was financed at previously. So that means hundreds of billions of dollars of incremental interest on top of what we're already paying for all the debt we've already incurred, not to mention the fact that we have these huge deficits. You know, we're talking about almost $2 trillion is the projection from the CBO for fiscal year 2023. So the fact that continues to need to be financed could end up in and of itself creating an inflationary cycle. And then, Jesse, let's just pray that we don't get a cold winter either here in the US or in Europe, because that's going to send already high oil prices, higher perhaps to the levels or even beyond the levels we saw last year. So those are the kinds of things that can continue to stoke inflation. So, that's one piece of the puzzle. And then on the recession side, you have a strong quote unquote strong consumer in terms of the consumer has been spending on a regular basis, but their balance sheets are getting wrecked. They've been dipping into their savings. The personal saving rate is down below historic levels. It's at 3.5%. We have record household debt of 17.1 trillion. We have student loan debts that are kicking in. But strangely enough, that even if you get some break in the jobs market, the consumer starts to roll over, it doesn't necessarily mean we're getting a recession either, because the government spending is now taking up even more of the GDP. So that could balance out. And these other sticky pieces of inflation could, kind of counteract what's happening with the consumer. So we're in very weird, unprecedented times. And what you might think is a normal outcome from a certain set of things happening isn't a guarantee here. And that's why you're hearing the gobbledygook from the Fed, because they're panicking. The one thing we're not hearing from them is, oh, sorry, it's our fault. We helped cause this, and we feel real badly about it. So we're definitely not hearing that.
Was printing $7 trillion wrong? Was that our fault? Sorry about that. Carol Roth, thank you so much. I appreciate it.
Thanks, Jeff.